My name is Andrew Kim, and I'm a freshman at Lake Oswego High School in Lake Oswego, Oregon.
And my name is Vedant Ramakrishnan, and I'm also a freshman at Lake Oswego High School. And together, we will be pitching Palantir to you. Palantir trades under the ticker symbol PLTR and operates in the software and programming industry with the technology sector. As of January 2025, they had a price point of $75.19. Based on our analysis and valuation of the company, we confidently issue a buy recommendation with a target price of $112.40 over the next year.
Palantir was founded in 2003, headquartered in Denver, Colorado. They specialize in cybersecurity, big data analysis, and any data-driven decision making. They also offer four key platforms: Gotham, which operates within government and defense; Foundry, which focuses on enterprise AI; Apollo, which specializes in cloud AI deployment; and finally, AIP, or Artificial Intelligence Platform.
With increasing demand for AI-powered intelligence solutions, the government and defense sectors are expected to grow at a compounded annual growth rate of about 20%. Similarly, with the growing need for data-driven decision-making within enterprises, that market is expected to grow at a CAGR of 44%. While Palantir has a lot of competitors, big and small, we picked Snowflake, Datadog, and MongoDB as Palantir's peers because they represent Palantir closest in size and service offerings.
Let's look at Palantir's competitive positioning. Palantir has a wide moat, primarily due to the deep expertise in AI and its government contracts. We also use Porter's Five Forces model to determine Palantir's competitive positioning. As we discussed, Palantir does a lot of business with the government. That is very lucrative, and that means there's a lot of competition for that business. Similarly, Palantir's customers are governments, large defense contractors, and enterprises who tend to have a strong buying power. There's a moderate threat of substitution, and there's also a low threat of new entrants and low supplier power. It is very difficult for new entrants to win large government contracts due to the long vetting process. Similarly, Palantir is a software company which does not depend a lot on their suppliers.
Key revenue drivers for Palantir are government contracts. These contracts tend to be stable with long-term, sticky revenue. In addition, they also work with large commercial entities that have a constant need for data and AI-driven decision-making. They also have made strategic partnerships with firms in the space technology sector by leveraging AI to drive innovation and revenue.
As we mentioned at the start, we made a buy recommendation for Palantir. We expected the share price to be around $112.40 by next year. Vedant here spoke about revenue drivers, and those revenue drivers are the catalysts that will fuel this growth. To arrive at this expected price, we used discounted cash flow, or a DCF model. We also looked at their market competitors to validate our conclusion. As you can see on the slide, we have done our DCF analysis and arrived at an intrinsic value per share of $112.40. Given the stage and growth level at which Palantir is at this point, we have made aggressive growth assumptions for the next 5 years. Based on our weighted average cost of capital analysis, we selected 8.9% to be our walk.
Other valuation models, such as the dividend discount model, do not really fit Palantir, as Palantir hasn't started issuing dividends yet. So we looked at Palantir's close competitors to get an idea for how Palantir's ratios compared to its peers. For this purpose, we looked at three other companies: Snowflake, Datadog, and MongoDB. Snowflake is high growth, high valuation with impressive revenue growth, but it is not yet profitable. Datadog strikes a balance between growth and profitability with strong revenues and good margins. However, its valuation is high. MongoDB, like Snowflake, is not yet profitable, but it has strong revenue growth and positive free cash flow. In comparison, Palantir emerges as a more mature, profitable company with high margins and steady growth. To round up some key takeaways related to ratios, Palantir's price to sales ratio is 12.1x, which is significantly lower than Snowflake's, which reflects Palantir's mature stage and niche focus. I'm not going to go over all of these points, but I will touch on a couple more. One of them being Palantir's gross margin, which is almost an astounding 80%. While there is a great difference between the net margin and the gross margin, it illustrates that Palantir has an opportunity to make gains from operational efficiencies. Last but not least, the customer growth rate is 30% year on year, showing how Palantir's customer base is rapidly growing.
While we strongly believe that Palantir is a great investment and we strongly recommend buying Palantir today, we would like to point out to you some of the risks that Palantir faces. There are headwinds from increased regulatory scrutiny of data privacy concerns and AI technology. The US government could also introduce spending cuts, which would impact the contractors Palantir has. On the competition side, big techs like Meta, Google, and Microsoft are all making significant AI investments. At the current price, Palantir is expecting validity due to the growth phase it is in currently. However, we still believe that Palantir can navigate these risks and still meet the price targets that we expect it to meet.
Like Andy said, we expect Palantir to be able to navigate the investment risks effectively due to their strong management team. Alex Karp is their CEO, and Peter Thiel, who practically everyone knows about, is their co-founder and chairman. Our optimism and belief in management's capabilities is echoed by institutional investors like Vanguard and BlackRock.
Palantir, as we all know, is in the business of using AI technologies and data to help defense contractors in the US and other countries to make intelligent decisions. Acting responsibly has to be and is at the core of their DNA. This is evidenced by their focus on actions and not just words. When they prioritize action and impact over their statements, they follow a product-first approach where they promote responsible use of AI, empower customers, and seek carbon-neutral solutions.
AI is at the core of all of Palantir's platforms. AIP integration enables organizations to make AI-driven decisions at an enterprise scale. Palantir is also making strategic investments in machine learning and automation.
Based on listening to all of this, I'm sure you will agree with our buy recommendation for Palantir with a price target of $112.40. And as you can see from the chart on the bottom left corner, Palantir has already approached $125 in February.
Thank you so much for your time.